Hello, and welcome to the Wade Borth podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, and welcome to the Wade Borth podcast. Today, I have a super special friend of mine, Curtis May. Curtis and I have, 5-6 years, Curtis, we've known each other a number of years, and it's been a while since we had a chance to visit and talk. We were recently down at the IBC think tank down in Birmingham, Alabama, and we reconnected, shared a couple libations together, and decided, hey, we should get together and do a podcast. So welcome and thank you for your time, Curtis.
Yeah, my pleasure. Good catching up with you, and it's always fun hanging out and with great people, talking shop, solving the world's problems like we do.
we did a great job in this couple hours that we had. Curtis, I know a good portion of your story, but maybe you can share just with the listeners a little bit about where you come from, where your background is. We've ground up a lot of the same ground together. We're roughly the same age, same amount of time in the industry. We do the same thing, but I've had people ask me, why do you have your competition on your podcast with you? And I never look at you or anybody else that thinks it has the same alignment of values and thinks the same as my competition, because I believe in the abundance theory that if you and I are talking and we're getting better, then that's just serving our clients and our customers that much better as well. If you don't mind just giving us a quick background, you've shared with me a couple of things actually I didn't know about you that maybe we'll bring up.
Yeah, and so it's, if you think from somebody taught us, right, you got to think from a prosperous mindset. So is there more than enough for everybody to have more than enough? And everybody hears stuff a different way, but we don't want to be like John the Baptist out there in the wilderness. So we want y'all to hear that there's other people doing this thing called infinite banking, and you're not crazy. Actually, so I'm from Philadelphia. I still live near Philadelphia, but born and raised. And I got into the business in North Carolina. I was playing basketball at Winston-Salem State. Like, that was the problem. It was like a walk-on. I transferred there. I got mad at my coach. That's another story. But I realized the NBA was not looking for 5'11" shooting guards, okay, with a mediocre handle. So I actually got my license during basketball season. Somebody showed me a check for $400 for an hour's worth of work. I said, doing what? And he showed me like a little flip chart. I said, this knucklehead, my basketball mentality, if this knucklehead could do it, I could do it. And I wasn't particularly outgoing, but I was blessed because I'm really a third generation entrepreneur. So my grandfather's in business, and my dad was in business. We were in the supermarket business. So I grew up in retail. So when Nelson talks about the grocery store, that has a lot of meaning for me because my mother always went out the back door. Okay. And so we always stole the peas. I mean, no, we were in the bar business. I stole the peas. My dad went through the front door, because I didn't know any of that stuff. So I was like, oh my goodness, I'm stealing the peas. All right. But so I started out with a company in securities license. I was with for 15 years, did buy term investor difference. And then in 1999, I read a little purple book called Rich Dad, Poor Dad. And then I started to realize that what I was doing in financial services and what he was talking about was different. And you start talking to business owners, most of them don't get rich in mutual funds. I had Barry Dyke on my show. One of the chapters in Powers of Manhattan is I never met and made his millions in mutual funds, like investing in mutual funds. They all build business. Even people that are mutual fund, like fund manager, they have mutual fund business. So they're getting rich investing your money, but they're not rich because they invested in mutual fund. And so I kind of got into that, and I still was lost for a decade because I wasn't sure. The market crashed. I wasn't excited about the industry, or I lost my religion, so to speak, when it came to mutual funds, because I had looked at Edward Jones and Wells Fargo when I left this other company, and I was like, I didn't feel it. I wasn't feeling it, and I hadn't discovered. I had read Nelson's book, but I didn't understand it, and I didn't know anybody that did it that could teach me how to do it for another 6 or 7 years. So actually, forgive me, y'all. I did Index Universal Life for about 6 years, and so then I started to figure out the difference. Okay, this is different. This is still accumulation, and this is more utilization. And then I started to form my framework with that, and I struggled through the business. It's funny because the business was not easy for me because I'm by nature not an extrovert. So when I tell people, look, your number one asset is you, and I teach them you got to work on your mindset, your skill set, and your network. I am a product of how to win friends and influence people, how to have power and confidence of dealing with people, Jim Rohn, Think and Grow Rich, reading literally a book a month, maybe a book a week for the last 20, 25 years. and just working on. Fortunately, helpful that I realized I was a nerd. Like when we met at Kim Butler's event and we did a Colby, right? So I'm a 7 fact find. And so, like, wow, that explains a lot because I was the kid, like in 6th grade, I would get interested in astronomy and I'd read every book in the span of about a week in the library on astronomy. And I would just binge out on information because I needed to know. So it helped me because in this business, I'm good at that. And then I can read all that stuff. I'm a good curator and then I can draw to you on a yellow pad. So I'm good at simplification. So I found that's my superpower. And so I built our business around education because what I found is that if you don't have to convince people. You just got to teach them how money works. I always tell people, look, your economic situation is a matter of choice, not chance. And what today will determine where you'll be at 5, 10 years from now. So I try to be that catalyst to give them new information so they can make better decisions. And so like my long story short.
No, that's fabulous. You're right on. It's Nelson always said, if people know what's going on, they'll know what to do. And so our job, at least my job is how I see it is, it's my job not to sell you anything, because quite frankly, I just want to give you enough information and teach you enough so you can make your own informed decision. And once what's going on and we have the right mindset, then you're going to make the right decision. And I'm just here to help you. I'm your Sherpa as you climb up.
That's right. I'm the Sherpa. I'm your financial Sherpa. That's what I tell people.
There we go. There's a new marketing business.
Right. I was gonna get a car with a picture. Most people know what a Sherpa is, though. But I was like, they're the people in the Himalayas that help guide people up the mountains. I was gonna create a poster with that, courtesy the financial Sherpa, on a llama or something. I don't know. And
here's a funny story about that is, it's not getting up the peak of Mount Everest that's the hard part. It's getting down alive.
Yeah.
A lot of people can get there, but nobody's gonna get down alive unless you have a really good Sherpa. That's really why I see, guys like you and I that can bring that years of understanding and skin knees and mistakes and all the other things that have gone on. We can bring that to people. We can bring to our clients or other agents or whoever else needs help to get down that mountain alive, because you can take a quick ship up there. There's a lot of ways, and I think I see that in the industry a lot, where there's this quick fix and we're gonna do everything in a year, and yeah, getting there is the easy part. It's getting back down and keeping your reputation, your sanity, and everything else alive as you come back down that mountain. That's where Sherpa, I think.
Yeah, because my biggest fear was I tried to give advice, but giving bad advice, for lack of a better word, of giving. So even when I was doing what I call needs-based needs analysis, which I don't agree with that philosophy anymore, but I really used to agonize on making sure that I was looking at everything and making sure that I gave them the best of what I knew how to do, because it was a big deal. I paid my first death claim at 22, and I was like, oh, excuse the expression, I hope this shit works. Whenever I got a call like 2 a.m. It was like, oh, it was a cousin of mine, and I had replaced a $10,000 policy with $100,000, but she only had it like 9 months. So then I discovered what contestability was, and all that stuff. People were looking at me like, "Does this thing work?" And I'm like, "Yeah, I think so." And then I used to carry that around in my little presentation book to show people, yes, it do pay, but to remind me that this is a big deal.
Yeah,
it's okay to adjust death claims. Yeah.
When I first got into business, my mentor at the time, he always said that you're the only one that comes to a funeral bearing a check versus a bill.
Yes. And I don't want to bring a little check.
No, bigger the check.
Right.
Of all the death claims that were delivered, I've never once had whoever I delivered it to go, no, that's too big, take it back.
I just told somebody that. So I've never had a widow or a widower tell me, oh, that's too much money, let's give some of it back.
Yeah, because it never is enough. Truly is never enough.
So even though we talk about the living benefits of IBC, we all graduate. And so to me, that's important. So I talk about creating a legacy of wealth and wisdom, which is even while you're building your empire, what happens if you don't make it, right? It gives you liquidity. What if you do make it, and how do you make sure that transfers not just the money, but the knowledge and the civic responsibilities and the good morals and the business strategies? Or how do you know? One time where was I working? It was a clothing store, similar like Macy's, right? It was called Straw Vision Clothing in Philly. So I was like 23, just training for the Christmas season, how to work the cab. But they made you do an orientation like a day and a half training for just basically your glorified cashier. We didn't show people around, you had to work the register, but you also got a history of how they got here. I've seen the same thing for the DuPonts. They had a DuPonts and how they got here and the whole, and
Right.
so they keep their storyline intact. That came in from Italy and they brought this one grape leaf from this and they were plant that and that's where this whole thing wine thing came from. I think that's the kind of stuff that needs to get passed down along with the money. So it's not just the money, it's the intellectual capital. How do we store that and capture that? And I think that's part of our what we're teaching or what is part of that. That's sometimes that's our part of the unseen. We had a conference called The Seen and the Unseen.
Yeah, yeah, I agree with that 100% because one of my foundational principles is that generational, intergenerational wealth and transfer, and
Mm-hmm.
not just of money, but of the knowledge. Quite in the book, Richest Man in Babylon,
Mm-hmm.
what's more important, right? The gold or the ability to earn and save that gold. And part of that conversation is it's the knowledge, and that's the part. One of my favorite shows, and I share this with a lot of agents, and when we talk about money is just a tool. If we don't know how to use that tool, then we're just as inept carpenter with the tool as we are without a tool. Quite
Right.
frankly, we can almost do more damage with a tool than we can with if we don't
Right.
have that
Right.
tool. And one of my favorite shows is how the lottery ruined my life.
Hmm.
If you've ever have you ever seen
No, I've
that?
never seen that. No.
Oh, so they go into stories of how people win the lottery and it just destroyed their lives, their friendships. Again, because if you think about it, and this is the visual. So my superpower is to tell stories and draw mental pictures. But
Mm-hmm.
here's somebody with a tool they don't have a clue how to use. Let's call it a chainsaw, and they're just whipping around, and all their people that are around them want to get close and congratulate them, and they're just going through and whipping through with that chainsaw. And at the end of the day, because they don't know how to use that tool, all their friends and everybody else, the trees are all just laying on the ground because again, they don't know how to use that tool. But watch the show if you get a chance. I don't even know if it's. I know it's in syndication. You can find it on some cable channel, but it's just a true story because everybody thinks that money solves the problem. Money doesn't solve the problem.
It
Um,
does not.
it's just a tool and what we can do. And I think this is probably why what Nelson when I first read his book and when I first started to understand what he was telling us, it took us from this idea of a consumer mindset to a business mindset.
Yeah.
And not that people that don't own businesses can't get this and understand it, but I think it's a little bit easier because let's take a 401k or whatever kind of mutual fund we have, whatever it is. But a 401k is the greatest example of that, is that this is the mindset of a consumer. We build
Right.
something up and we consume that asset. What if we use that asset to grow other assets versus consuming it? And it's that consumption and that consumer mindset that we really try to get people to shift their paradigm, shift the way they think about any of the assets they have. And some of the assets they have, some of the greatest assets they never take advantage of are themselves and their own process, right? Their own superpowers and their own strengths. People take very little stock.
That is actually your number one asset. So one of the
It
things
is.
that we teach is that investing is not about buying something, it's about becoming something. And so you have to become a real estate investor. You got to become a good, because there's no risky investments, there's risky investors. So if you invest in your expertise, so one of the things that we teach ways is the three rules of investing. Invest in your expertise, lean into your expertise, invest in what you can influence the outcome of, and don't chase returns. And because what most people think is investing, and they're not investing, they're really speculating. Because people say, I'm good, I'm big on definitions. I want to invest. I want to. Well, let's. What do you mean when you say invest? Because I got a feeling we're not saying the same thing. And I said, I'll say, have you heard of Warren Buffett? Yes. I said, have you heard of Benjamin Graham? Go, no. I said, that's Warren Buffett's and Charlie Munger's mentor. They're disciples of Benjamin Graham. And he says in his book, The Intelligent Investor, investment is something you put your money into where your principal is safe and you have a reasonable opportunity to make a profit. If it doesn't meet that definition, you're speculating. So now if you hold that up to a 401k, you are speculating. And so one of the things that stood out to me, because we're both at the think tank, was Justin said that really Nelson's trying to teach us, you just said it, it's about ownership, right? So when you look at the grocery store, it's being the owner of something you're both a consumer and a seller of. And just like banking, so that I lost that. That's where you got to go back and recharge the stuff. Because I
Yep.
hadn't, now I've been really thrown out there. It's about, you got to see, because you're in business. That's how people look. You're the CEO of your life. And so you can't, I call it your personal economy, right? You can't control the economy, but you can control your personal economy, which is your production and consumption as a family. So that's what you can control. And so therefore you are in business as a family unit. And how much of that you get to keep, how much of the banking do you get to control. There is, and you can't control that. You can only, like Jim Rohn says, don't wish it was easier, wish you were better. And he says that the winds of adversity blow on us all. The key is to being able to set a better sail. What Wade is teaching you guys that you're working with him is how to basically set a better sail. So when that blows, we always have the saying, what's going, you'll know what to do. You don't know what's going on. And so you don't know what to do. You get your information from sound bites off of CNBC. That's a problem. Or you listen to Kramer or something like that. And they're all in business to make money off of you not knowing this stuff. And that's the key. So one of the things that we teach, Wade, is we say, listen, don't do what they tell you to do, meaning the institutions. Do what they do. So here's what they don't do. So here's two schools of thought in personal finance. There's what I call it in our system, the accumulation theory. So they teach you buy and hold, dollar cost average, get out of debt, the rule of 72, modern portfolio theory, portfolio rebalancing, all of that, buy term investor difference, all of that is based on the S&P and hoping the stock market goes up, because it's all predicated with the stock market as then. But if you look at what institutions do, I was on a call with the guy that runs my primary company I do business with. They're 35 billion with a B dollar, and they don't do any of that stuff. So if you took a corporate finance course, here's what they teach: velocity of money. And if you're in business, it's all. If you're in real estate, that's the Burr method. I was just talking to this morning, here she called it heads. How many heads can I do a day? I was speaking to this group of this laundromat association down in Florida last week, and it's how many, they call it turns. How many times, because they'll try to get bigger machines so people can get their stuff done with one or two loads, get on these big washing dryers and do it all and get it done. That way they can get somebody else in and turn that. All that's is velocity, right? Then it's cash flow. So even when you're talking about the equipment financing from the book, that's velocity, that's utilization. And then EVA is cash flow, it's leverage, right? So if you've got $100,000 in debt, like people are trying to get out of debt, in this monetary environment, that's not a thing. Like I call it working your way up to zero. You're not trying to get out of debt, because if you've got a $100,000 mortgage and you got $100,000 cash, or in better yet in cash value, that's a balance sheet neutral decision. You have debt, right? And then the fourth thing they do is, I interviewed Barry Dyke at Pirates of Manhattan. They store their cash, their tier 1 capital, in permanent life insurance. They do not buy term investor difference. They own whole life, buy the boatload, billions, like Wells Fargo, Bank of America.
$20 billion.
Yeah. So they're so let's do it. What is your tier 1 capital? Right? Where do you store your tier? You know what I mean? And do what they do, because all of the things that we named on the corporate finance side, velocity, leverage, cash flow, permanent insurance, they all work in personal finance, and they're safer, and they create more liquidity, use, and control of your capital. But if they're getting, you got to see if they're teaching you to buy, they're micro trading in and out of stuff every day using your cash, right? If you pay extra to your mortgage, you want to get out of debt, what's the bank doing? They're either loaning it back out to somebody else. That we're loaning back out to somebody else. So you're creating velocity and cash flow for them. That's what they're doing. They're not, let's send our depositors more money. They're putting it back out there. So you might as well, and here's the other thing. You got me on a rant now. So think about this. This is part of understanding how money works. Because of inflation, your money will never be worth more than it is today. Yep. Don't you think they know that? So why do you think they give you a lower interest rate on a 15-year mortgage? Because they make more money if you paid for it for 30 years, but they want velocity because they can get it back faster and loan it back out. Because the only thing you're doing, it's not the rate of interest, it's the volume, and you're just giving them back more money faster so they can create velocity. So you got to look at like both sides of the playing field, and you got to understand everybody has a self-interest, and you got to have your plan, because if you don't have a plan, you're part of their plan.
Right. And that's exactly what Nelson was teaching us, is think like a business owner. Stop thinking like the first business you're in, business everybody's in, it was his quote, is you're in the business that you do on a day-to-day basis, and you're also in the banking business, like it or not.
Because you need to be in the banking business, right?
Well, you are in the banking business. Who's controlling it is the other question.
Right.
And that, and so just for any listeners that maybe are on here that don't know what we're talking about Nelson Nash, who wrote Becoming the Infinite Banking Concept. And the words becoming your own banker is key, right? It's not Curtis becoming your banker, it's not Wade, it's you. And it does come down to you having to take responsibility, and you taking the time, the effort to being in that business, because that can be one of your first and best passive cash flow business if you know what you're doing.
Yeah.
And to
Yeah.
take the time to learn what that is and how to manage it is huge. I've been doing this for 15 years, and I think I'm starting to get an understanding of what that is. It takes some time and it takes
Right.
some effort
I
to make
thought I
it.
did, and then I went back to the think tank. I'm not doing it wrong, but I need to get better. I'm not paying the premium. I'm like, oh, it's all these
Yeah.
things that refresh. I'm glad I came back here because you got to get out of your own head. I don't care what
Yep.
industry that you're in. You need to get around. One, you got to get away from what I call no, I won't say civil. I was going to say civilians, but that for like business owners, you got to get around other people of like mind because if you're not, they'll drag you down. They don't mean to. They just don't think like how you think. And so Nelson
Right.
used to say, you can't think like the world thinks. I was talking to a client this morning, well, she's going to become a client, and I went to my wealth manager, and he wasn't too keen on this, but she
Right.
saw somebody that was doing it. This chick bought, real nice lady. She started doing real estate. She was an architect. She started in 2021. She bought 16 properties in a year.
Wow.
Well, yeah, that's what I said. So she is locked in. So she says, all right. I said, look, banking is a concept. So don't get hung up in the insurance. Because really, I told her, look, it's a saving strategy. Where do you store the cash? So banking, we talk about banking. This is why I tell it way. It's like, listen, it's creating a pool of capital that you control to move at costs to meet some needs you have. And so maybe this is not enough, but I just meet people where they're at. So I'll say, look, can you save? It's a saving strategy at the core because where's the best place to store cash? Properly structured, dividend paying whole life. So if how much does it cost? Wrong question. Is how much do you want to save? So if you make 100 grand a year, could you save 15, 20,000 of that and run that through your system to create an alternative source of financing? And so a lot of things I do. So let's say if you're all listening to this and you're working, and one of the things that I do is I'll help people just to get them the discipline they need, if they need to do first. I'll have them create a wealth capture account. Like I just create a checking account, this separate account, and I'll say, go to HR. I want you to, so if you make 100 grand, that's $15,000 a year. I want you to take 577 to pay and have it direct deposit in that checking account. And I just want you to see if you can do it, right? And then from that, then I want to make sure they can do it, and then we'll help them start a program. But I want to meet them, where they are. I don't get to the point where income and premium should match, but you can't start that way. And I don't care really what a person starts with. I just care that you start, and now I got you reading a book, and you'll grow to that at some point if you stay connected and you keep educating yourself and you keep using it, because it is caught more than taught. And there's another saying I have is that you got to get in the pool to learn how to swim, right? And so you got to activity produces. Knowledge does not produce activity. So you can't have what they call the paralysis of analysis. You got to do the work, and then you need to get with Wade, and you need to call him and get this thing started. And I don't care if it's $500 a month, just get in the game.
And I agree with that 100%. And what I, and I don't know, this is just another good visual that I like to have people just imagine. And it's not even imagine, just kind of, it's about realization a lot of times. Because sometimes we look at stuff and go, oh, and I'll use Elon Musk as a guy that he didn't invent the electric car industry, but he looked at the existing industry and go, oh, shoot, we can do so much here where there's a whole lot of opportunity.
Mm-hmm.
And he's revolutionizing an old stodgy industry in the auto industry. But with that being said, the thought I try to leave with people to get them to think about is, what are some of your favorite restaurants, Curtis? And I'm a food guy. Look at me. Obviously, I haven't met a whole lot of meals I don't like.
Places.
Steak.
What's that place?
Yeah.
What's that place across the street from Orlando we used to go to when we go? Well, anyway, I can't think. Ruth Chris, but there's other ones other than that. But I like steak.
You like steak?
Brazilian stuff with these carbs. My wife I want to go to the Brazilian place. Well, it's all meat. I was like, and the problem with that is what now?
So a lot of the good, at least the high-end restaurants, and a couple of my favorite restaurants, and I see it more and more, even here in Fargo, right, up in North Dakota, you're starting to see this where the restaurant is saying, hey, we got some supply chains issues, so what we're going to do is we're going to go out and source our locally grown food, our vegetables, our meats, our all the other things that they're doing, right? So they're taking control of their supply chain, right? Maybe not 100% right away, but now they own their own cattle ranches and so on and so forth. So they can control that whole process.
Yeah.
But we're teaching people, you and I both, we're talking to clients and other agents about this, is we're doing the same thing, but we're controlling our supply chain, and our inventory just happens to be cash. And it's called the banking process. And now the more control over you have, the less interruption in your supply chain, less interruption somebody can say, hey, we can't get you steak. Because if you don't have steaks in your steakhouse, guess what? you're out of business.
That's a problem.
And so what we have to do is just imagine it that way. And eventually, again, we don't have to control all of our supply chain. We just have to control the key parts of it to start with. And then imagine if it gets profitable enough. And again, part of what we teach in the IBC's process, what I like to, this whole thing behind EVA, right? You have to understand what the cost is. So then we can say this business, this ranching business is profitable on its own. And now we have other customers. We don't have to be our own best customer. And if we get to the point where now we have enough volume and enough success, we can find other people that want part of that same supply chain.
Mm-hmm.
And we can, they can start tapping into it. Again, it's still going to be a profitable business, just like our banking side has to be, again, our financing side. I know people don't like the word banking, but our financing side has to be just as profitable as every other business that's out there. Because if it's not, you're stealing from that. And then how do you know how to price it when somebody else wants to tap into it? So next time you go to one of your favorite restaurants, find out where they're getting the food from and just think about this whole process. And that's really what we're trying to teach people to do, is take control of that supply chain so there can be less interruptions. It's not going to be 100% insulated, but it can be insulated a ton if you have the ability to say yes or no to any deals that you want to do.
I love that. I'm stealing that.
Take it all you want.
I was talking to his business owner, right? And I kind of did a variation of that. It was a guy that spoke the day before on financing, like so finance the equipment, the businesses. But one of the things he said was, and I thought about Carlos, the book, The Case for IBC, and that first chapter where it's talking about, all right, it starts out great, and then the business goes a little bit sideways because he said we're going to put a lien on the equipment. And then we're going to you got to do a personal guarantee for the money they're giving you to buy the business. And so and they're hearing, I get money to buy the business. I hear that's great, but what if stuff goes wrong? Now you work for them because they can take control of all your stuff. And so one of the things is, right now if they're giving away money, I don't know if you not want to use it because you can expand. It takes a while to save up 50, 100 grand, and you can get it in a week or so. But you need to borrow out of what I call opportunity and not out of necessity, meaning that you have the money, you are just deciding on whether or not you want to use their money or your money. And if stuff goes sideways, you have enough capital that you can just buy them out and you own it, and now you can control your payment schedule. You can give yourself. I've got people now that have enough capital that they replace kind of the hard money on their rehabs, on their properties. And then they have enough to begin to buy them out. And so if the project goes over a month, it doesn't matter. They're not going to get a penalty or whatever because they control the banking system. They've loaned the money from their banking system to fund this project. And I'm teaching them to pay themselves back with interest. So now, here's the other tip I got. Who said that? We pay everything back at 10%. Okay. Yeah. And so, done. I mean, I was like, if they charge this, you should pay that. Nope, 10%. I just got to revisit economic value added. And so that's why, guys, whatever industry you're in, you need to go to that thing so you can always sharpen the saw. We are always sharpening the saw and talking to each other and how do we explain this, or how did this work, or how can we serve our clients better. And so if you're in business, and most of your listeners, you're successful, you already do this, but it's business is business. And so you got to get around. When I was playing high school basketball, all my friends I learned really early the power of association. And I only hung out with people that wanted to play college basketball. So I didn't hang out in the corner. I knew I had to have a certain grades. Here's just what I need. You got to be able to get in and do the work. Because if you're a head case, you could be really good. But if you're a head case and you're going to flunk out, coaches aren't going to recruit you. And not good ones anyway. And then how are these guys? I always matched myself against these guys. And I would hang out with people that I was always like on the edge of my ability so they play so they won't make fun of me, because that's how much better they are to me. And that kind of dragged me forward. And this is what I like about hanging out with you guys and hanging out with the other practitioners at the think tank, because that's what it is. Just steel sharpens steel.
Right. 100% agree. There's what's the old adage says that you only soar as high as your circle of friends. Well, it's pretty easy for a guy like me, but I like to be the dumbest guy in the room when I'm having these type of conversations.
That's my thing to say. I want to be the dumbest guy in the room. If I'm the smartest guy in the room, I need a new room. I need to get...
Exactly right. Yep. I agree with you 100%, because you learn so much. If going back to the old adage that God gave you 2 ears and 1 mouth, use them accordingly.
Right.
We want to listen to the people that are successful, and looking at people that are successful. We look at the successes that people know, the Rockefellers, these type of things. They're not doing like you said earlier in our conversation, they're not doing the things that the ordinary consumer are doing. They're doing the things that rich people are doing. The best thing you can do for the poor is not become one of them. I don't remember who said that, but I
Right.
love that one. So our job is to understand, read, educate ourselves, think for ourselves. I have another podcast, and you can look it up on Spotify or wherever you listen to podcasts off. It says that you have to love yourself and your family more than you love Wells Fargo. I want to
Mm,
make this point
mm.
to you. People say, "Oh, I pay it back at 10% or whatever it might be." You have to have a business mindset that your financing operation is the most valuable, or at least one of the most valuable operations you have in your arsenal. You might have a real estate business, you might have some passive income opportunities, whatever you're doing to grow wealth, but that financing arm has got to be just as powerful. And if you're willing to pay Wells Fargo 10% for a loan, why wouldn't you do that or more for your own family? Again, people, where they spend their money will tell you a lot about what they think and what's important to them. So
Yeah.
when you start looking at it, start evaluating it, when you use your own money to invest in maybe it's your own business or somebody else's business, that should have a return commensurate with how valuable of an asset that you're using.
Yeah, I think it goes back to thinking like a business. And so one of the things I got that I talked about it as a strategy, but now, in what you just said, and is I'm starting to think about it as it's a business in and of itself. So I was talking to this woman that she's a real estate broker. I said, listen, here's how banks make money. What if you could add what Bank of America's business model to yours? Because they look at all the big buildings downtown in big city. They control it. They know something about money. What if we could take a page out of their playbook and add it to your mix and have a third business, which is your banking business, your financing business?
Right.
And which is sometimes I'll say, because they'll get caught up in the banking thing, I said it's really a business of money management, of cash flow management, because that's really what you're doing. It's you have to be a good money manager and or be a good steward of your wealth. So if the banking makes you uncomfortable, compliance people, we're talking about being a good money. Banking is a concept. It's not. We're not getting a bank charter. We can't definitely do fractional reserve banking. But that's
We'll sell next to Bernie Madoff.
yeah, I was gonna do another joke. I'm not gonna go with.
So, well, as we wrap up, Curtis, I could spend and talk hours with you, man. You got so much energy, and I love being around you and around people that have that kind of energy. And that's actually one of the reasons I find my batteries are so recharged once I get back from the think tank. I got
Yeah.
1,000 ideas, 1,000 people I want to talk to. I'm glad you took time to spend with me today. Thank you so much. I can't appreciate you enough.
Yeah.
But with that, I want to ask you one question. What was your biggest takeaway from the think tank down in Birmingham?
Seeing Jason Lowe's business model of literally how to beat a bank. Buying this for what he bought. He's building a house, like a $400,000 or $500,000 house for his sister. And the picture, I wish I took a picture of that picture because
Yeah.
he had the picture of low capital or something, and brought to you by the infinite banking concept, like where you see people like this has been brought to you by XYZ Bank. He had
Right.
that was major, and then how here's the premiums we pay, here's the interest we recaptured, here's the profits that we ran through our system. For me, that was like, all right, how do you do that? It just took my thought process of that this is a business to a whole other level. That was huge for me. And then Justin's, it's a business. The book is a book about ownership.
That's why I have a contract, a life insurance contract, because
Mm-hmm.
a contract denotes ownership, right?
Yeah.
I think that was a big key. One of the things that I really had to take away was just understanding the process. And you and I, and there's so many things that we know and understand, but we forget until we get back to somebody that reminds us what's really important. And that's, again, going back to these same conferences where we surround ourselves with people. I love to find people that challenge my thought process just to make sure what I'm saying and doing is correct. But what part of it was understanding that we have to, and Nelson wrote about it in when he talks about the problem, understanding that people first have to recognize that there is a problem. And the next one is, are they willing to get better? So he writes in the very first line of that chapter, do you want to get well? He's talking about the parable, and he's like, do you want to get well? And then here's the process, and then what's ultimately the product that we use? It's the best product in the world. But you have to get people to go for those first three steps to understand that they have a problem, that they want to take control of that financing function in their lives. And then the second one is admitting, okay, I'm willing to do what it's going to take to build this business, to build that structure, and then finding that structure, and then how do we find the best product that fits and serves those needs. And that's really what we do, is help people through that process. And I think if we're doing it correctly, again, with that financial Sherpa, that's helping them get up that mountain, get back down alive, so that they understand the process, and we're empowering people. I never want to be in a position of being that gatekeeper. I don't want to hold knowledge. I want to share it and empower people versus being that gatekeeper, where I see a lot of people in the financial industry all want to be the gatekeeper because that's how they think they get paid.
Yeah, I think you have to. We're in the belief changing business, and somebody once
Yeah.
told me a changed viewpoint can change your life. And hopefully, as you listen to this, maybe I've said it a way where it's like, light bulbs go off, and it makes you reach back out to Wade and say, look, all right, I heard that crazy guy named Curtis help me. Right, exactly. He gets a little excited, he talks fast, but yeah, but that's what excites me because you build a because too much we have this, let's just say, a top down mentality, but you build a community from the bottom up because each of you listening can control your personal economy and get better every year, grow your cash flow every year, grow your business some every year, and we can build a foundation underneath that here's the word now, guarantees that you're more efficient and better off every year. So I come from a securities business. You couldn't even play a word game to say guarantee, right? Because you can't say that. But in life insurance, you can say that, at least with whole life. Just to be clear, we're talking about properly structured dividend paying whole life with a mutual company because we like certainty.
Thank you for that point. That's so important.
That is so important because think about this. By saying that, I've just to knock the bar down from what close to 2,000 companies down to maybe less than 12.
Maybe 20, maybe at the most.
Yeah, 12, 15, 20 maybe. I used to say 15, 20. Somebody said, no, it's more like 7 to 10 or 12. So I was like, so I'm trying to give because some good mutual companies, but they don't like the strategy. But anyway, that's it. So if you're talking to somebody and say, I heard about this thing, and they don't immediately start to beat you over the head with the book, you got to get this book, you got to do this and that, and they want to show you, illustrate, they don't know what they're doing, and you need to run.
Right. Find a practitioner. That's one thing that when I'm working with agents, one of the very first things that I require is that they become certified. Not because I think that there is knowledge that can be brought to them, but it's a commitment that they're willing to hear and understand the message that Nelson wrote in his book. So by getting certified, at least you're jumping in the pool. Like you said, you can't move forward unless you get in the pool and you really understand what's going on. And that's, I think, is the first step. Is that if I'm training or mentoring an agent, the first thing I want them to do is make sure they're certified. Because I want them to understand at least some of the basic knowledge.
Yeah, that's good stuff.
All right, brother, I appreciate your time. I always appreciate your spirit and helping me out and being on my podcast. And maybe if you can share it with your clients, it'd be some good stuff that they can take away as well. And because we can all grow together in this world where we can lift each other up.
I will do that. And because they need to hear another voice other than mine.
Is that the truth, man? It's good to hear other people talk, and especially having something that's so uplifting is that freedom that we search for when we're out here saying, I want that freedom of either time, relationship, or money, whatever it is. But how do I get it? Because that's what we're all out there searching for.
It is freedom to be able to do what you want when you want, or read the menu from left to right, from that other than right to left.
Exactly. All right, man. Thank you so much for your time, and maybe we'll have you on again soon.
All right, you're welcome. Have a great day, everybody.
Bye-bye. If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.